Hi, everyone. Thank you for joining today. We're going to kick off. We are recording this session, so for any of those who are late or struggling in, they can catch the recording for the beginning. But we're just going to start off with some housekeeping. We are recording this session, so we'll be sharing this. I know we have a lot of global investors on the call who won't be able to join given the time difference, so we're going to record and issue the recording afterwards for you as well as any colleagues who haven't been able to join. Just as an introduction for those who I haven't met, I'm Emily. I lead our customer success team here in the East Coast of the US at Novata, and we work with companies and investors like yourselves. If you aren't familiar with who Novata is, we are a sustainability management platform, and we make it really easy for private markets to collect and analyze the sustainability and ESG metrics that you may be monitoring or collecting in the diligence phase, including carbon emissions. And we also have an advisory practice that Jesse will get into a bit more in detail that has expertise and support for strategy and performance management, along with a carbon accounting and regulatory readiness. So just as by way of introduction, I'm not the only one here. As you can see, Jesse and Teresa are joining me, and we're going to have a super conversational discussion today with three of us. So I'd love for them to come off mute and introduce themselves as well.
Thanks, Emily. Really excited to be here chatting with you today and talking to everyone on the webinar. My name is Jessie Miller. I'm a senior manager on Novata's advisory team. I work primarily with our US-based investor and company clients, as well as some based in EMEA as well. I've been at Novata now for a little over 3 years, but working in the broader sustainability and ESG space for about 10 years.
Great. Hi, everyone. Thanks for tuning in. My name is Teresa, and I'm the metrics and regulations lead here at Novata. I'll talk a little bit more about my team later, but we're a small but mighty team of specialists that interpret and translate the global ESG standards, frameworks, and regulations into comparable and accessible metrics. So basically making sense of the ever-changing alphabet soup of disclosures in our industry. My background is in environmental policy at both the regional and state levels in the US and in impact evaluation.
Great. Thanks for introducing your guys' selves. Again, it's a very conversational discussion today. We are going to talk about tips and best practices, about your regulatory requirements, all the way from just hitting those deadlines when it comes to requests and disclosures that you're working on and your reporting deadlines. Because this is a discussion, we did ask for some questions ahead of time, so thank you for those who submitted, but we do have a Q&A box, so please do submit questions during our chat, or we'll call out for some additional ones at the end. It really helps us tailor the conversation and make sure we're getting to those points that you really want to know about. So appreciate that. We have a lot to cover today, so we're going to get into the content. We're going to be walking through a few buckets that we believe occur in chronological order, but we will have a live demo midway through so you can get a feel of how Novata does things with our technology platform. And we'll definitely hear from Jesse and Teresa on things off the platform if you want to take those away as well. So our themes today that we'll walk through in buckets are setting strategic ESG and sustainability objectives. From there, we're going to dive into developing the right framework. We like to say framework, but you guys might say questionnaires, surveys. What metrics are you actually putting into those data requests that align with your goals? Next, we're going to talk about rolling those requests out. So a lot of you are joining us as investors. You're issuing these to your portfolio companies. So how do you engage them and actually get the data back that you need? And then finally, when you do get that data back, what do you do with it? How do you review and analyze the data? So we'll be going through those in terms of our buckets and our themes, and that's kind of how we at Novata position the order in which we work with our clients a lot throughout what we call reporting season. So it's definitely kicking off at September, and we see a lot of reports and questionnaires issued in the beginning of January. So to kickstart us, Jesse, what are some of the common motivations for actually developing a sustainability program? Maybe you don't have one, maybe you have ideas. Care to answer that for the audience here?
Yeah, thanks, Emily. So the advisory team works closely with a lot of our investor clients to help them really formalize and develop their ESG approach. I would say the number one driver we commonly see is requests or demands from LPs for ESG data, and LPs using that ESG data as part of their annual monitoring process. And GPs need a plan or strategy to be able to collect that data from portfolio companies and provide it back. I would say we also see GPs trying to fulfill requirements as part of industry initiatives such as PRI and EDCI that ask either what you're doing broadly or require specific metrics to be collected from your portfolio. And I would say we also see some motivations when you're thinking about raising a new fund, attracting new investors, especially if you are in the European markets and classifying as an SFDR Article 8 or 9 fund. And specifically, you need to think about what ESG characteristics your fund is promoting. And I would say we have a few GPs and clients who just want to formalize their ESG program based off their internal drivers, and they're really thinking about how ESG data can help drive value and improve financial outcomes within their portfolio.
Nice. Teresa, do you have anything to add? I know from a regulatory perspective, that might be one of the common things.
Yeah, piggybacking off of Jesse's points, just love to reiterate that regulatory drivers are one of the strongest motivators for adopting a formal ESG program at firms. However, unless you are particularly well-versed or familiar with the regulatory processes all over the world, it can seem incredibly complex and opaque. Um, that's why the metrics and regulations team, we specialize in tracking, monitoring, and ultimately streamlining the complex regulations down to the need to have and decision useful metrics for companies to collect. We're building tools at Novata and on our team, as well as guidance at the specific metric level, where we offer jurisdictional specific tips and best practices, as well as more holistic tools like the Regulatory Navigator, which is our free comprehensive database of regulations. Companies can then like use, and we have unique characteristics of a company that are then integrated, and we can spit out regulations that are tailored to your specific context.
Yeah, I would say from like a client working with our clients perspective, sometimes they do come, like Teresa said, with the regulations in mind, and then they'll actually build off of that. So it might be a starting point that you're forced into something via LPs or regulations, and then you're tailoring that year over year into more material metrics and data and your sustainability goals, as Jesse mentioned. So you have your program established, great. How can you approach the actual data collection? You need to collect data, you have something in mind. What do you do, Jesse?
Yeah, so we like to think about data collection as one piece of the wider ESG integration journey across the investment lifecycle. So we're primarily now talking about annual portfolio monitoring, and this typically fits into the ownership period of the investment lifecycle. We see most of our clients treating this data collection as an annual monitoring exercise, where during like a set time of the year, usually like around Q1, they're collecting a set of metrics from portfolio companies each year. And it's also really important to think about what that collection looks like year over year. So you're growing a data set that's comparable and you can measure growth year on year. I would say we really encourage our clients to think about what ESG metrics you want to collect from portfolio companies and how that data will be used, whether it's for regulation, like we've talked about, or it's something you know that your LPs want to see. And then we really recommend communicating with your portfolio companies what your desired objectives and goals are around this data collection exercise so that they understand what they're doing. We typically see better engagement from portfolio companies who understand the bigger picture of why they're being asked to log on to Novata and provide this ESG data on their companies. Um, and also internally, it's really important to have internal alignment within the firm itself, and between investment teams or the IR team on what you're doing and why you're doing it and your overall goals. We do see a wide variety of internal owners of annual monitoring within a firm. Sometimes it's the investor relations team who's owning the process. Other times you have a dedicated head of ESG or other professional at the firm. Other times it's split across investment teams or strategies. And we find that GPs are most successful when they have clear roles and responsibilities and alignment across the firm on why they're collecting data from portfolio companies and how that data is being used.
Yeah, I'd echo the messaging across. Some of our clients always forget that other internal stakeholders are there to help. So I think the alignment on internal messaging is really important. So then, Teresa, if you have this approach or this data collection upcoming, what metrics and data are you actually going to include in your survey? And is there anything we should know about that?
Yes. So there are three levers that I always suggest to balance when you're deciding which metrics to include in your survey, and I'll zoom in on all of them. But the first one is the regulatory and investor requirements, like from your LP, as we've discussed previously. Two is the existing metrics and the data that you've collected before or have access to. And then three is benchmark availability. The first one, definitely to keep in mind regulatory reporting requirements. This is the bare minimum. For example, many GPs are required to collect the principal adverse impacts or the PAIs from their portfolio companies to comply with SFDR or to provide to LPs. This should be foundational to meet investor expectations. So definitely be aware of that foundational requirement. And then two, the metrics and data that you've collected before. Absolutely no need to reinvent the wheel. Review what you're already collecting and ask why, and then do we still need to collect this data point in this way? I think a useful exercise is to conduct a gap analysis and compare and contrast what metrics you've identified from the first lever, which was the requirements, with the second one, which data you already have. And then lastly, benchmark availability. A common suggestion I give is to prioritize metrics for which other companies of your similar industry and size are already collecting. This materializes your performance relatively to others and can really help create buy-in for your ESG program at your company. Novata offers tools to comprehensively view your organization's or your portfolio's performance with a collection of benchmarks tailored for private markets. And this overview offers insight into how your performance measures comparatively to how others are doing. After reviewing these three levers, my favorite part of the whole process is to configure the least common denominator of metrics that are balancing the regulations that you're subject to that are also meeting investor expectations while still giving you insight into performance KPIs.
I think that's a great breakdown, Teresa. I would just add one piece around considering what's material to the sectors that you're invested in, and making sure you're incorporating materiality into that metric framework. So our advisory team often uses SASB materiality to understand what ESG themes or topics are material to a particular industry, and then selecting ESG metrics from there. And sometimes we'll develop multiple frameworks for an investor if they're invested across two sectors, for example. And that really helps us understand the data from the company's perspective and add in metrics that they might already be collecting or that we know are going to be decision useful for them because they're financially material.
Mhm.
Yeah, I know our team, our client success team spends a lot of times with our clients, making sure that they feel good about their framework. So, Teresa, I know the two of our teams work really closely together. Like, what are common things that you see as pitfalls when building a framework that we should flag for folks so they don't fall into them?
Yes, a common pitfall that I see is trying to include an all-encompassing survey. So one big mother of all surveys instead of optimizing for brevity based on your priorities and data integrity. If you want to align to all the ESG standards, frameworks, and regulations perfectly, you're going to have 100 metric survey, which might be comprehensive, but we want to be aware of survey fatigue. And unfortunately, the current state of the fragmented landscape does mean that metrics do not 100% converge, and there are nuances that make them different. For example, Invest Europe, that framework in Europe asks metrics in such a way that makes sense for the European context, whereas EDCI questions tend to lean a bit more broad as they're industry agnostic. SASB, as Jesse mentioned, is foundationally optimizing for financial materiality, while GRI, for example, considers impacts to people and the planet more generally. When I say optimizing for brevity, I mean to focus on thematic coverage instead of specific data points. So this comes from knowing your priorities at your firm. And of course, it's worth mentioning that we are aiming for progress over perfection. It might mean, yeah, as Jesse mentioned, like maybe in multiple frameworks, it might be maybe more often. Um, and then nuance here again, the other side of this the other side of this is that some disclosures, in particular regulations, they do require specific data points. So specificity does matter here, and this is where knowing your strategy and your priorities are of utmost importance. A second pitfall that I see a lot is working backwards, where companies are trying to choose metrics to fit a narrative that they're trying to tell. You're not choosing metrics to fit your narrative, you're creating your narrative based on the data that you get from metrics. If you feel that your framework is getting unwieldy, we do have tools within Novata on the platform that can help with this that Emily will showcase.
Yeah. This is just a little glimpse into what our team works on with our clients. So um, what Teresa was mentioning with the different standards and frameworks, we actually have built out in what we call our framework builder. So you can see the different regulations she was mentioning, like EDCI and Invest Europe here. But again, someone could start from scratch. They could, like Teresa said, you're building from maybe multiple frameworks and standards. So I'm just going to go ahead and showcase the fact that I can select a specific standard and I can customize from there. So I'm going to move on here. So we're building out the EDCI metrics to start. I will say, Teresa didn't mention, but one thing our team in CS leverages is the metrics and regulations team, Teresa's team, to make sure that these metrics are up to date. A lot of these metrics actually do change year over year, unfortunately, or they're just improved. So we add in that additional guidance. And we actually take our users' experience to make sure if anything's unclear throughout the initial time answering it, we add in that additional guidance for better clarity next time someone answers it. But things like regulation, those metrics may not change. EDCI tends to add to their framework year over year. So those are incorporated from Teresa and her team. So you guys don't have to think about it. Um, some other key things, she mentioned some pitfalls, like you have an unwieldy framework of many metrics. Some things our team likes to think about when maintaining that is being able to bake in conditional logic. So you might actually be able to ask 5 metrics and only have 2 show up for a company based on their answer. So in our framework builder, you're able to select if they answer a certain way, then they will or will not receive the following metrics. So that pairs your survey and your questionnaire down a bit. Other things like regulatory responses that you need answers for, or for LPs, we have the ability to mark them as required responses just to show which ones are really important for you as an investor to collect the data from. And then we all want to make the portfolio company's experience better because you want to be able to have that data and have it back quickly for those deadlines. So we have the ability to carry over previous answers, which is really helpful for things like policies in which they don't change year over year. So you might want to suggest they use their previous answers as an automatic for a specific metric. Last thing, I think Jesse mentioned things that are material, things, your messaging that you actually go out to your portfolio with is important. So we have the ability to write a custom message and make sure you're including that context as to why they're receiving this questionnaire, which is really nice. And then you're able to actually label your survey a specific way. In the US, we've seen folks even stray away from the ESG terminology, and they're categorizing things via policy or risk-related categories. So in the framework builder, you can adjust the order or relabel stuff from environmental to resilience or risk if that's more in line with your portfolio messaging. And then last, we want to make sure they're good and they're perfect. So we do have the ability to preview reports. So once you are previewing your report or your questionnaire, is my screen loading?
Yeah, you do have a little loading window.
Oh,
You're
there
good
we go.
now. Yep.
Preview is loading. So now that we're able to see what it looks like on the portfolio view. So even before you issue your reports, you feel confident about what's going out to them. And I'll just flag some of those. One thing I didn't mention is the ability to bake in calculations. So we had seen that scope methodology, scope emissions metric. We could actually ask them for scope 1, 2, and 3, and then have those values calculate to a total GHG emissions. So we're actually not putting it on the company to calculate that. So you'll see that here as a preview. And then again, like I said, we have the ability to carry over those previous answers if they're relevant. So prompting them with those makes it a lot easier and you'll get the data back quicker. And the last thing you'll see here is we have this Novata AI. So we do have the upcoming functionality to upload. A lot of our companies have policies or even maybe their own sustainability reports. So once they've uploaded those to Novata, it will flag and suggest certain answers relative to those documents that they uploaded. So we know that they're not only on Novata, they might have other investor requests and answers that live elsewhere. So this is a good functionality to make sure that they've gotten all their data in one place and it's a pretty quick answer response time for them as well. So you'll see the AI suggestions here. So I'll just open it and it will suggest some answers for your investor survey. So that's about it on the preview of our frameworks there.
Thanks, Emily. Thanks so much for showing the framework builder and our AI-enabled features. Switching over to rolling out requests and engaging portfolio companies, Jesse, in your role in advisory, can you walk us through how advisory helps firms engage portfolio companies?
Yeah, for sure. So we have a few processes for helping engage portfolio companies, and I'll talk about a few of them now. So as part of onboarding, when a new company is getting onto Novata's platform, we will host what we call a data collection best practices session, where we go through common pitfalls within their framework. We talk about difficult metrics, and we also share best practices for things like where to find data within the company and your internal data stakeholders, for example. And then we also review formulas for calculating specific metrics that have a defined methodology, such as annual percent turnover, for example. So that's helping the company learn and better understand what is being asked of them. And it also helps improve data quality from the start because they understand the specific methodology being applied for a given metric. And then second, we also host office hours for companies to drop in and ask any questions they have while they're filling out a survey. So this is great because they can have access real time to the advisory team while they're filling out the survey and not feel like they're stuck or alone in the process, which is really great for companies who are doing this for the first time. And then for our carbon accounting clients, we provide even more hands-on support for portfolio companies via individualized sessions. So companies typically have access to 3 sessions with dedicated carbon advisory experts, and they use these 3 sessions to understand the company's business model, and then also really specifically to carbon, the data availability, such as utility bills or spend-based data for our scope 3, and they will basically work through that with the advisory team to understand how they can use those data inputs to calculate their carbon emissions via Novata's carbon accounting tool. So I know that's kind of offline, but I know we also have a lot of tools within the platform to help investors navigate the monitoring process and engage with portfolio companies. So Emily, do you want to share a bit more on that?
Yeah, thank you. So in the platform, and by the way, I personally love the advisory office hours. I think I've been on a couple of them with our companies and I learn a lot, but it's specifically like carbon accounting can be hard and daunting. So just having someone there is really helpful. But in the platform, so your reports are out, and you can think about this if you're not using Novata as an offline kind of offline as well. But you want to know who's engaging with these questionnaires. Am I getting data back? Am I feeling that they're engaged? So in our platform, we actually have this report engagement tool that helps our investors understand where they're at within their reporting cycle. So right now I have an example in which Stars Hall Capital has 8 reports issued. We have 0% progress, so we are needing to work on that. So we use our tool to understand how. We only have 1 of 9 users engaged, so that might be a flag that I need to go out and get additional contacts for these questionnaires. Maybe I don't have the right one. And then if we drill down further, we'll come here and we'll notice we actually have progress on Taylor Soda Shop, so maybe we don't need to contact them specifically, but we need to contact Rory and Richard. So I'm able to contact individuals directly or entire firms and all of the users associated with them. But you'll notice that I'm able to see if the individual has logged in. So that just like, have they even opened our survey, which is really helpful. And then I can target folks. Jesse mentioned engaging with C-suite or other leaders initially. Maybe you don't want to actually nudge them on actually filling the data out. You just want to target certain individuals. So this allows you to do that and then see their completion rate. So I'll go ahead and nudge those folks. The nice thing here is our onboarding team has also went through and created a bunch of these templates and resources they'll give our investor clients offline, but in the platform, they're able to use these templates as a reminder. And it serves as a best practice of here's a quick nudge that you could send these individuals, but we know that you want those custom messages and specific notes about your firm, so you can customize and create whatever email language you like once you've selected something. And then you can preview just to make sure you feel good about what you're sending out to the individuals. So that's the nudge there. Once you've actually issued the nudge, you might just want to understand, okay, when did I send these nudges? When were these emails sent out? We have a whole log of that. So if you and your colleague are tag teaming this, you can see what email communications last went out to your portfolio companies. Um, and then lastly, it's a little bit of a CRM system. A lot of folks don't actually have this contact information in one place. So it's nice to just have all of your portfolio companies and their users here. And on the flip side, the portfolio companies can add as many users as they like. So you'll be able to see this list grow and see who is actually engaged. I have some work to do here. I only have one user engaged. So we're engaging, we're trying to nudge people along, and we're starting to get reports and data back. So Jesse, when data is coming in, what are best practices to review that data?
Yeah, thanks, Emily. Love that report engagement overview and all those tools we have. So we really recommend doing a thorough data quality check of data you get back before you start analyzing and creating annual reports or sharing it out with LPs, so you can make sure the data is of the quality you want it to be. And so we do this for a lot of our clients, especially those submitting to EDCI or preparing SFDR PAI statements. We tend to look for four qualities when reviewing data submitted by portfolio companies. Number one, completeness. Two is metric outliers. Three is significant year-over-year change. And four is poor performance, typically against a benchmark. So for example, on completeness, if we typically see that a company submits their GHG emissions data, for example, every year, but they don't for a given year, we'll often reach out to that company and see why they weren't able to provide that data. Sometimes they didn't have their utility bills ready yet. Other times they might have just missed it, or the ball got dropped internally. So we always like to double check and see actually is that data available and are they able to go in and provide it again. And then for something like metric outliers, we often see values that are far below or far above what we would expect. And we can develop that based off the benchmark or the internal portfolio average. So something like, for example, like annual turnover, the average is typically somewhere between like 20 to 30%. So if we're seeing a value that's like 80%, for example, that is typically an outlier. And we would flag that to make sure the data is correct, that they use the correct formula to calculate turnover, for example, or it wasn't just like an entry error when they were doing the report. And then in terms of poor performance, we often use our benchmarks to get an initial evaluation of performance and to see if they are far above or below the benchmark. We also sometimes compare a portfolio compare the portfolio average to an individual company, especially if they're in the same sector, and it gives us a better understanding of the value we should be expecting. So that's typically our approach, and it's great to get a sense check of how companies were engaged and their overall response rates for like that data collection cycle.
Yeah. Chiming in here to say that it's also important to keep in mind reporting deadlines as part of the post data collection process. Different regulations and frameworks will offer varying deadlines throughout the year. For example, SFDR is June 30th, EDCI will be April 30th, and then more recently or more closely, the California regs are actually due January 1st. It's incredibly important to earmark where your data is and just to have a stopping point and incorporating a cutoff as of dates for your data. So you're not collecting data all year round.
Yeah, I would say it's 100% a balance. I mean, that's a lot of dates to keep in mind. That's data coming in. That's all of the things Jesse mentioned to look out for your data. And it's like, it's a lot of the time crunch for some of those early deadlines for reporting. So definitely goes back to those initial priorities you're setting for yourself is really important to understand what's the key deadline and goal. So we've talked a lot through the entire um, chronological process that Novata feels, but we want to open it up for questions. Just we have some initial questions that we'll get through, but before we open it up to questions, if you all live could submit some Q&A based on our discussion in the Q&A box. We'll give you some time to submit some questions here. And while we do that, we're going to pull open a demo poll. So if you are interested in learning more about the Novata platform, feel free to check yes. If not, no worries. We'll catch you next time. But someone will reach out to you with more information if you do that. So yeah, put in your questions. Now's the time, and we'll have the last remaining 10 minutes answering them. Let's see. All right, I think that we've given enough time for Q&A. So we will kick it off with our first question. We actually received this ahead of time. So um, we'll pose it maybe to Jesse. How can investors balance the need for all these disclosures again, and getting accurate data when they or their portfolio companies have limited resources?
Great question. We've touched on this a bit, and I think it goes back to at the start, understanding your priorities and being clear about what the data, why the data is being asked for and how it will be used. Then you can really prioritize specific metrics or frameworks based off what you need to do as a firm. Typically, the most important thing is LP or investor request, usually followed by regulations, if not equal, or something like EDCI. So don't waste time from portfolio companies asking for data that you don't need, really. Like be strategic about what you're asking for so that companies know that you are not wasting their time or sending them on a wild chase for data that will never get looked at again. I also think it's really important to provide companies with the tools and training they need, which you do via providing a software tool like Novata. Plus being realistic about timelines. Companies can't usually turn around this data within a week. We typically give companies around 4 weeks or so to return this data. So they need to have a realistic timeline in place. And also having a deadline or a due date is also important. Otherwise, this just gets kicked down the road and never gets answered. And then I would say be aware of competing priorities within the company. This is also why it's important to have alignment within the firm. You don't want to be asking them for ESG data while they have something else going on, such as a big board meeting or anything else like major that's taking away their time.
Yeah, I would just echo what Teresa had mentioned at the end of our discussion that there's these different deadlines. So having that as of date for your data is really important because your one deadline reporting may look different when you've gone and done more deeper dives with your portfolio and review in June. So just making sure you have that as of deadline for your dates. Internal deadlines are just as important as what you're communicating with your portfolio so that you hit them. And then I would just say, once all is complete, don't forget to thank your portfolio companies. I mean, they're providing this time and effort that they've sent to you. So it is important to acknowledge like a closure with them and not just leave them hanging as to, am I done reporting or chatting with you about these data? So I think that thank you is a nice note to wrap everything up from their side as well. We also received a question about communicating the value of ESG data to investors. And those investors or companies that may have mixed opinions on the value. Jesse, are you able to touch on that a bit?
Yeah, this is a tricky one. It's hard to create buy-in and support for ESG efforts if everyone isn't on the same page or doesn't understand why you're doing this. So I like to really focus on connecting ESG data back to tangible financial returns and speaking in terms of what will resonate with that investor or stakeholder, and thinking about it from their perspective. Like, why does this matter to them, and how can this ESG data or non-financial data be helpful to their goals and objectives based off their position? I also think it's helpful to not use the super broad term of ESG and talk about these topics more specifically because that often resonates more and takes away kind of like the blanket effect of just bucketing everything as ESG. So for example, if you're collecting energy data from your portfolio companies, you can talk about that more specifically in terms of energy management, reducing energy consumption, using energy more efficiently. And all of that links back to financial performance in the form of you're reducing energy bills, for example, which could lower your costs to manufacture your products. So that it does have an ESG benefit of reducing your energy consumption and being more efficient, but it is tying back to the financial outcomes that many stakeholders want to see.
Nice. We do have a question I want to maybe touch on before I shift to one that Teresa might get to. But one, once data is in hand and quality checked, so what reports can be generated for the GPs or their customers? From a platform and customers Novata perspective, a lot of times we'll see initial generation of those LP requirements. That's like the first line. EDCI, the actual template. So that's a very structured specific, same with Investor Europe, structured specific data template that Novata has the ability to just download and submit to those reporting sites. And then our SFDR PAI statement, there's some calculations and actual documentation that you need to develop. So those aren't necessarily like reports, but they are outputs that you need to generate with the data that we see our clients use. And then from a client portfolio perspective, we also see them use the benchmarks. So pointing your companies, we didn't get to see it today, but pointing your companies to the benchmarks in Novata is a great starting point as an output to be like, what does the data I submitted mean? So that's what I see our clients using the data once they've initially QA'd it and reviewed it. Those are the initial first steps. I don't know if Teresa or Jesse, you have anything else in mind.
I think our two teams work very closely on generating reports as well, especially your team, Jesse. I would say we are playing around with having more skeletal report generators also for upcoming regulations. That should be live very soon. And yeah, any deliverables that your team has produced, Jesse?
Yeah, we tend to take a really bespoke hands-on approach to developing deliverables based off what our clients want. So over the past few months, for example, I've done a few what we call toolkits. We call them ESG insights and analytics toolkits for our clients. And for one client in particular, we did about 5 to 10 slides or so of a portfolio overview, analyzing the data, pulling out key insights, looking at performance across the portfolio in a more broad way. And those slides could be shared with investors or with internal investment teams. And then we actually did individual snapshots or tear sheets for each portfolio company that had a nice synthesis of the portfolio company's data alongside their prior year response, as well as benchmarks and the portfolio average, so that the investor could then give this snapshot back to the portfolio company and use it as a starting point to talk about the company's performance and their priorities over the next year and how they can improve ahead of the next reporting cycle. So it's great because you get a really good understanding of performance across your portfolio, but then you also have this resource that you can share directly with portfolio companies. And going back to, what we've said a lot, it really helps them understand the value of what they're doing and like the why behind it, and so that it doesn't feel like they're just submitting data and then getting nothing out of the process.
Yeah, I would say those snapshots and toolkits, like don't feel shy about like not sharing your sustainability reports that you complete with your portfolio because they get to see like what the fund level results or portfolio, even if it's not directly about them. I've seen our investors share and have like portfolio readouts with with their portfolio and fund or internal stakeholders just to see the results and what came of it. Um, Teresa, I think this is a question you might be able to answer. A lot of our investors are focusing on SMEs, what should small and medium-sized businesses focus on?
Yeah, it's a great question. You're a small company, you have very few little resources. We got a question around what sustainability disclosures that they should be, this kind of profile of a company should be reporting to. And I would suggest to start one step even before that. Um, Before that, even if you're not required to report to a specific disclosure yet, either from a regulation or an investor specifically, before you delve into the world of disclosures, I would start with asking, what do my stakeholders care about? What do my customers care about? What does my board, who does my, like, what does my board care about? At a very foundational level, it cannot hurt to just start with a carbon inventory or a cursory look at diversity or governance policies, or even do an introductory climate risk assessment. And there are several disclosure frameworks. TCFD is a very common one for people just starting out, apart from any specific disclosure. Then I would start with very simplified, scaled down standards. So the California regulation, I'll call out specifically because it really is meant to be an on-ramp for simplified climate disclosure. They highlight specific minimum disclosure requirements meant for companies that are just starting out. But to answer your question, I want to make sure I get it, but specific disclosures, I would suggest California regs, which is just a carbon inventory and TCFD aligned report. If you're operating in Europe or have European investors or VSME, as well as loosely aligned to CSRD, would be a great suggestion. And then CDP with a primary focus on SMEs is for the climate focus for small and medium-sized companies.
Nice. Thanks, Teresa. I've been hearing those acronyms all over the place. VSME, CS. Um, we do have one more question. I don't know that we'll get, it's a very lofty question, so I'm not sure we'll get to answer in its entirety. So is there a way to determine how specific improvements at a site would impact the GHG? I believe we're referring to GHG emissions, i.e. installing car charging stations, installing LED lighting, etc. Um,
I have an answer for this.
yeah,
This
go
sounds
ahead.
like a more impact-focused framework where you are looking for a specific outcome from your data that you're trying to collect. I think this is a great use case for year-over-year change or year-over-year data. I definitely would suggest maybe before you implement a change, tracking, for example, if it's car charging stations, a metric or data point around battery storage or battery capability, and then just tracking that the next year after installing it. And that way you can really see the through line. It does require a little bit of preparation, like you kind of have to know what you're looking for. But I think this is very helpful if you're building an impact framework about a specific technology or a specific decarbonization technology that you're trying to track.
Yeah, thanks, Teresa. We have one more question that I think is really
Mhm.
a good one to end on, but um, there's obviously a lot of frameworks to be used. What's the interoperability between these frameworks? Can companies who report on Invest Europe also report on EDCI, for example? And is Novata working towards consolidating these? Just from a client perspective, this is something the CS team always looks for and definitely flags and gets help from Teresa and her team. So there are a lot of synergies between them, but we will definitely point out where there's not. And the framework builder you saw will have those already baked into it. So we'll point out where they align for both, but we will also have to point out where they don't align.
Yeah, jumping in there, definitely interoperability is my favorite word. Um, Definitely if you are reporting to investor, you can also report on ECI. The regulatory authority bodies themselves are aware of the interoperability issues across regions, and they are trying to converge wherever possible. With that said, I am always making consolidated lists about if you are more Invest Europe aligned, but you also want to apply to EDCI. This is something that we come across a lot and something that we're very familiar with as the changes are introduced every year as well.
Hmm.
I would also add that just the way Novata's platform is built for data collection, if you select the Invest Europe and the EDCI framework and maybe SFDR or whatever else as well, it will consolidate all of those frameworks into one metric list so that any metric, such as Scope 1 emissions, that is applied across all of those frameworks will only be asked once. So
Mhm.
you're really cutting down on the time and any duplication that there might be. And companies, answer that one metric, and then it gets applied to all those frameworks wherever it is consistent across the frameworks. So it does cut down on that. It makes it a bit more of a streamlined framework when you do have to balance a lot of reporting requirements.
Yeah, for sure. We are at time, so we got through a lot today. Jesse and Teresa and I can answer any questions if we receive them offline. But we really thank you for joining our webinar today. We will be sharing the recording and the replay. And if you do want to chat with us more about the framework functionality or the actual platform functionality, we will be following up with those who said yes. And if you did not say yes and want to, feel free to reach out to us on our website. Um, Off of the platform, I personally love all the resources we have. We have like an article on all of those regulatory deadlines that Teresa mentioned. So if you want to navigate to our resources page, those live there as well. So thank you all, and thanks Teresa and Jesse for joining me.
Thanks, Emily. And thanks,
Thanks,
everyone.
Emily.
Bye all.